Every profitable forex trader is profitable because they have a solid winning profitable trading plan. Their trading plan consists of the right trading session, their trading strategies that have the edge in the markets, and a solid risk management plan that keeps them safe and lowers their emotions while trading. Utilizing the right trading plans that consist of these tools that I have just mentioned is what keeps the profitable traders profitable. And it is exactly how you will become a profitable trader yourself. On this channel, I've been sharing tips on how you can move from a beginner phase to advanced phase fast. And trading plans never miss my list. So on today's video, I'll show you how to make a winning trading plan that consists of these guru factors. The first thing that you need to consider when you are creating a trading plan is your trading session. What is your trading session? You need to know the right time for you according to your time zone to take trades in the market. And you need to know the right pairs to trade according to your trading session. Because you cannot trade any pair anytime. Actually, you can, but it's better to trade pairs that are aligning to that trading session. There are 4 trading sessions in one day. First up, we open the markets by the Asian session or Tokyo session, however you prefer calling it. And in Africa, we are usually asleep during the opening of these sessions. So as an African, I cannot trade these sessions unless if you are an early bird, if you usually don't sleep at night, then or you wake up early, then you can go ahead and trade the Asian or Tokyo session. But personally, I wouldn't trade this session because it is too slow for me. But it may be a perfect session to trade for someone who doesn't like those fast moves, who gets overwhelmed by those too volatile sessions. Then I recommend that if you are that person, you go ahead and trade this Tokyo or Asian session because you'll trade in peace there. Next up, we've got a London session which opens early in the morning. So if you are a person who runs some errands in the morning, this session may not be perfect for you, but if you are free during this time, like you wake up early and you don't have somewhere to go, you are not driving your child to school, you are not doing anything in the morning, then this session may be a perfect session for you. It is a volatile session and it is very good to take trades on this session. Many people actually trade this session and I myself do trade this session. So it's a very good session to make money. Number 4, we've got the New York session, my favorite. New York session for Forex is opened at 3:30 p.m. South African time. And it is a very volatile, very nice to take trades, but it moves very fast. So you as a trader, according to your personality and your time zone, you must pick and choose which session is the most perfect for you. And select the pairs according to your trading session. For example, during the New York session, you can trade any pair that has USD in it, and during the London session you can trade any pairs that have some GBP like GBP USD or Euro USD, and during Tokyo session you can trade anything that has JPY in it, USD JPY, what was JPY, anything that has JPY, you can go ahead and trade that during Asian or Tokyo session. And it is very better to trade those pairs during Tokyo session because all other sessions that are paired with that session which is open are closed. So you literally have some type of edge if you are trading a pair that is in the open session with a pair that is in the closing session. You see, so that is how you pick and choose your pairs. If you are a forex trader but you are currently unprofitable in your trading journey and you need some sort of advice, input, or some sort of assistance in general, and you'd like to meet me so that I can assist you somehow, go ahead and book your private trading session with me today. Number 2, you must know what type of trader are you. Are you a scalper? Are you a day trader? Are you a swing trader? It's very important for you to know this or to decide, because you must know how much time you need to spend analyzing your charts before the session opens. For example, I'm a day trader. I trade London and New York session. So before the session opens, I know that I have to create some time, block everything, and go in front of my chart for 30 minutes to 2 hours. Just me and my charts alone, analyzing my charts before the session opens. During my time of analysis, I spot the trend direction. I see the chart patterns that I'm interested to. I'm seeing the areas whereby I'll place my entries and exits. I already know which strategy I'm going to be implementing for this type of trade. I have calculated my risk to reward and everything is set, and I'm now sitting and waiting for my session to open so that I can take this trade. If I'm using daily time frame, 1 hour, 4 hour time frame for my chart analysis as a day trader, and I'm using 15 to 5 minutes for entries, then if you are a swing trader, you might need to be on your chart for a little bit longer than me, because you will be more focused on the higher time frame than the time frames that I'm using, right? So you really need to know which type of trader are you, and also to be prepared enough for the open of your session to take trades. If you are a scalper, you just need that hour, 30 minutes, 25 minutes, 45 minutes at least to be in front of your charts analyzing, because you don't have to see what happened, the whole background story. You are just interested in getting in, spotting opportunities, getting in the market and getting out like instantly. You are not planning to stay inside the markets for long. You're just moving too quickly. So there's no need for you to spend hours and hours in analyzing the markets. Next up, you're gonna have to have a strategy. Now, I have made a whole video showing you guys how you can build your own winning strategy, and I have made a video right here showing you guys a strategy that you can use. But the best way to start off, especially if you are a beginner, like a beginner, is to start off with an existing strategy. That is how I started off, and I developed from there. So go ahead and take this strategy right here, back test it, see if it works for you. And as you grow in this market, you'll discover new things that the market is yet to teach you. Then you'll keep on refining that working strategy. And before you knew it, you'll have your own trading strategy using the strategy that's already working, just by adding on some of the things that works for you personally that you found out yourself from these markets. Taking all which I have said into consideration, now let me show you my smart money trading plan, which has helped me become a profitable trader since the beginning of my trading journey till to date. Alright, good people, this is my full smart money trading plan, and it's just based on the pure price action, so it's gonna be very easy to imitate. I don't like complicated things. There's no need to complicate things. This trading plan is actually based on 4 structures. Number 1 is the market structure. Number 2 we're going to find the optimal trading zones. And number 3, we're going to find liquidity concept. Number 4, we're just simply going to look for our entry setups. Step 1 is the market structure. On the market structure, step 1, we identify the trend direction. We have the downtrend, we have the uptrend, and we have the consolidation. And it just looks like this. This downtrend resembles this right here. As you can see, it's got lower highs and lower lows. That is how we see that it is actually a downtrend, a bearish trend, because the previous high is lower than the next high, and the next high will be even lower than the previous high, and so are the lows. These are the most common trend direction people talk about a lot here on YouTube especially, but it's not all. It's not complete. It does not end here. Yes, we have a trend, a downtrend, we have the uptrend, and we have a consolidation trend. But it's not all, guys. It's not all. It does not just end there. That is why most people are actually failing on trading, because they go into the charts looking for these structures. And as you can see right here, on this structure that you are looking at currently, it's no longer a downtrend. It's no longer an uptrend. It's not even a consolidation. So what do you call this structure right here? Because if you say that we only have the downtrend, we only have the uptrend, we only have the consolidation trend, then what do we call this structure that is happening right here? We call this structure the change of character. I take it personally, I take the change of character as another trend direction on this forex market. So according to me, we have 4 trend direction movements in the forex markets. We have a downtrend or a bearish trend, we have a consolidation trend, and we have a bullish or uptrend. Then we have a chalk pattern, which I also consider as a trend direction. This is no longer a downtrend. This is not an uptrend yet. It may potentially be an uptrend soon, but this is not also a consolidation. Let me introduce you to something called the change of character. It's another type of market structure, and it is basically what is going on this 4-hour GBP USD charts right now. As I have said, this chart is no longer in an uptrend, is no longer in a downtrend, uptrend, or it's neither consolidating, but it's in the form of this structure right here, which is called the change of character. As you can see, that before the price was moving down, making lower highs and lower lows, lower highs and lower lows, and so forth up until this point. As it's reached this point, the charts, the markets, the structure started producing what? A higher high. It's changed the character. It's moved past this you see, it's moved past the last low, and actually not just the last higher low, but it's even past the second higher low, confirming that it has now changed the character. It is no longer moving on the same direction as it was moving before. Let me just make this red. You see, it's made a lower low, it's made a lower low and a higher high. So now the mess is no longer mathing, because for us to say this is a downtrend, this chart is making the downside movement, is moving downside, we have to see the continuation of this downside pattern of lower highs and lower lows. But now we are not seeing that. We are seeing a lower low and a higher high. Now the math is not balancing at all. There's a problem. There's something is wrong. So this is what we call a change of character. After that, we are expecting the markets to make towards the higher highs and higher lows, signifying the bullish moving trend. How are we extinguishing the higher highs and the higher lows? The next high must be higher than the previous high, and so forth. And the next low must be higher than the previous low. So it will continue as in the upside movement. This upside movement, this is what we call a change of character. And it is basically what is happening here right now. As you can see, the structure was moving in the downward direction. It was bearish, but as it reaches this point, think of this, or take this point, or actually this point right here and this point right here is the same thing. This structure right here and this structure is basically the same thing. So just take of it as the same thing, because it is really. So this point and this point is the same points in different forms. Because on charts you will not see something like this, but it will appear like this. The structure is bearish, making lower highs and lower lows. But after this lower low, the structure changed, and it gave us, or it took out the first lower low. Take a look at your left. The structure moved and passed the first lower low. And then it gave us lower high right here. It no longer gave us a lower low as it was doing, moving in lower highs and lower lows. But now the structure has changed. That is why we said we have a change of character, because it is no longer giving us lower highs and lower lows, but it is now giving us higher highs and higher lows. And we look for the market's direction on the higher time frames. It may be a daily time frame, it may be a 4-hour, or a 1 hour. Those are the only time frames that I consider as higher time frames as a day trader. I'm not talking about the scalpers or the swing traders. If I swing trade, I start doing my top-down analysis from the weekly time frame going down. I usually hit TP within the first 4 to 5 days within the same week, and I don't scalp. After spotting my direction, I like marking out my swing highs and swing lows using the daily time frame. And as you can see that indeed after changing the character, the markets continued inwards in the upside direction. The market was indeed changing structure. This is very important to know. You should know that the market does not only move bearish, bullish, or consolidating, even though those are the most common movements and those are the really movements, because this is the way in which the markets move. But you should know that there's something called the change of character, and people lose money because they just fail to understand that. I personally, as I have said, take the change of character as another form of the trend direction. And these are my swing lows. I'm just gonna make them green so that you can just be able to differentiate which one is which. So I'm marking my swing highs and my swing lows with green, and this would be my swing high and my swing low. Next up, I'll be just now starting for the key smart money concept, which is identifying the fair value gaps, the order blocks, the liquidity areas, the optimal trading zones on the higher time frame. So when you see these fair value gaps, order blocks, POI, mark them as your optimal trading zone. All you have to do is wait for the price to come back to your optimal trading zone, touch those zones, observe the candlesticks formed, and enter instantly. And as for me, I really like taking my optimal trading zones on the either 4-hour or 1 hour time frame. As you can see, the structure on the 1 hour is pretty much the same as on the 4-hour, which confirms our market's direction. We are even on the 1 hour making what is called a choke, which means that we are no longer looking for selling opportunities, but we are rather looking for the buying opportunities. If you see a choke patterns as you were looking for your optimal trading zones, then my entry will be this point right here. I would target this order block as my entry simply because, first of all, the market is bullish. The overall trend on the daily time frame is bullish. The overall trend on the 4-hour time frame is bullish, and the overall trend here on the 1-hour time frame, it is bullish, and it is a fresh trend. As you can see that it is currently changing the structure here on the daily time frame. So I see this choke wave, and the rule of choke is that we enter as the order block which created the choke wave, plus it is near the support area. If you know the trading rule, the number one trading rule is we buy at support and we sell as the resistance. However, I wouldn't target exactly the support because I see no liquidity here underneath this support area. So I wouldn't target the market to come all the way to the supports because there is no gap here. There isn't nothing the markets can come down here as the support for. So this order block, as soon as the market taps or even come near this order block, I'll be ready to enter my buys, because sometimes the markets will just not tap right as the order block. It will just do something which is called the order flow and then move back up. I'm just gonna wait for now and see if my entry point does play out or not. I'm doing this analysis, is the weekend, so I'm gonna come back tomorrow when the market opens and see what's really took place on this GBP USD. And if I see that the market is indeed respecting my structure, then I would go ahead and press my enter using the candlesticks that will form here as another confluence and confirmation for my entry. And obviously it goes without saying that I'll be taking my entries on the 15 minutes or 5 minutes time frame, which currently looks like this, but this is just an internal structure. It's an internal structure, is not the overall trend direction structure. And I think it is very important for people to know that we have an internal structure and then we have the overall trend direction structure. It is important to not trade the internal structure. Scalpers usually trade the internal structure, but if you want to make, I don't want to say if you want to make more money, because I believe that everyone is making money, whether you are a scalper, a swing trader, or a day trader. But yeah, if you want to scalp, you can go ahead and use the internal structure. But if you want to day trade or swing trade, you definitely want to focus on the overall trend direction. And obviously it is the next day, as you can see there's yep, as I have said, as I had anticipated yesterday, yes, the US opened and it went right through to touch my, actually it didn't touch it, but it went down to tap near my targeted order block, my targeted zone, and then it reverted and it looks like it is currently going back up. So yeah, this was my very good analysis. This was a very good analysis. This could only mean that we were right about the trend and we were right about everything else. So it is very important as a beginner trader to know how to do this stuff yourself, because this is what will actually make you money in the market, and failing to understand this is what will cause you to lose money in the markets. As you can see, do you see these areas which I had marked as my swing high and my swing lows? Yep, you see the market is bouncing through those two areas. Right now, the market is targeting this area above, which is marked with green, which I had said that it will be my swing high, meaning that when this trend comes out here, I'd be sitting on good money. I'd be really sitting on good money because the nice thing, the most beautiful thing about the market is that if you know the structure, you can never go wrong because you know where this market is going. So it is very important to know the market structure and to master actually the market structure. Right now, this thing is coming here. You can mark the yellow line, the yellow level above as your first TP area, and you can take your second entry on this pullback and have your second profit on the swing high, which we had marked as a green line above. So you can actually have two entries here. If you missed this entry, our initial entry level, you can go ahead and have another chance to enter again as the first or the second pullback, and you'll have another opportunity to make money from there.